Michel Valbrun. Bring him up to the stage. Get on your feet.
Yes, sir. All right. How many of y'all ready to make more money this year? Say that's me. How many of y'all been having a good time? Say that's me. Awesome, y'all. Well, you guys are in the right place. My name is Michel Valbrun, aka Money Making Mates. All right. And today we're going to be talking about maximizing tax credits and benefits and all those good things. All right. So y'all probably already know this, but maximizing tax benefits. So being able to help your clients be able to save more money on taxes, obviously going to provide the maximum amount of value. So one of the things that obviously we know that tax is part of life, it's inevitable. So one of the most powerful things about us in this room is literally helping people take care of one of the most complex, most annoying things in their life. Right? A lot of people don't even realize this, but when it comes to all the money that we're spending on taxes, like your single largest expense. All right. So I'm going to say a word. I need y'all to say tax after it. Okay. So think about this. When you make income, you pay income. When you buy something, you pay sales. When you buy property, you pay property. When you sell the property for more than what you paid for, you pay capital gains. When you die because they tax you to death, you pay death, right? But the biggest tax of them all that no one talks about is what I call ignorance tax, right? And that's the tax that you pay by not understanding the tax code. That's the tax that your clients are paying by not understanding how to take advantage of these credits and doing things legally and ethically so where people are not going to jail and people getting caught up with the IRS. They already said that. We had, you know what I'm saying, someone up here talking about how they're really coming after black taxpayers. So it's really important that we do what we need to do to make sure we're helping our clients and really providing that value and service. And when I say ignorance, I don't mean that in a rude or condescending way. It just means a lack of knowledge, lack of information. Even the Bible says that my people perish due to a lack of what? Knowledge, right? It's in the Bible. All right, so check this out. So eligibility of the tax criteria for tax deductions. You want to make sure they're eligible. We're going to be talking about that. It's going to help ease the tax burden for your clients by being able to qualify for these tax credits. Again, a lot of these tax credits I'm going to be going over today are usually for lower income individuals, 1040 types of folks, but they're going to definitely benefit from it. So therefore, it's important that you understand how to qualify for these different tax credits. So we got the child tax credit, CTC. We got the earned income tax credit. We got the other dependents credit. We're going to be talking a little bit about head of household. All right, so the importance of being able to do this, you want to make sure it's efficient for your planning, tax reductions, tax deductible, maximizing tax credits and benefits, all right? So the earned income tax credit, the EITC, again, it's supposed to aid lower, moderately income individuals. It was actually first enacted or brought into place back in 1975 as a temporary benefit. Obviously, it's one of the most common, most popular benefits now for folks that qualify for it. It functions as reducing the individual's tax liabilities. So super key here. It's also refundable. So as you all know, there's refundable tax credits and there's non-refundable tax credits. All right. So this is going to give you a refundable tax credit, and it's going to be able to give your clients be able to get some money back, possibly, or increase the refund, or even be able to qualify for a refund. In order to qualify, you have to have children, related dependents, foster children adopted below the age of 19 and below the age of 24 if they're a full-time student, investment income below $10,300 and earns less than the specified threshold. So you guys can see here on the table, you got 0, you got 1, you got 2, you got 3. These are some of the qualifications and limits that they can expect, right? If you're Nick Cannon, go all the way down to 13. So obviously, you know what I'm saying, you can get a little bit more money, all right? All right, CTC, y'all. So child tax credit aimed at assisting households with dependent children. This is a non-refundable, so you're not going to get money back. They did make some changes. Uncle Joey, Joe Biden, Uncle Joe, however you want to acknowledge him. He made some changes with the American Rescue Tax Plan. Those received $3,600 per dependent in 2021. Now they're eligible for $2,000 for 2022, increased from $2,000 to $3,000 if there's children under the age of 6. Also made it fully refundable as well. So it now became fully refundable, allowed for 17 years or older to qualify for CTC form, 16 years. Families were able to now receive monthly financial assistance instead of having to wait to file. So you all know during that period, people were able to get some of that benefit early on instead of having to wait the whole year to be able to qualify for it. We got the CTC and ALTCs. That should have said. We got 200,000 threshold for individuals filing as household, single, married, 400,000 less for married filing couples. Should have a social security number. In 2022, up to 1,500 of the child tax credit would be refundable for each qualifying child, subject to certain conditions. The refundable portion increased from 1,600 to 2023 here. And to claim the refundable portion, filers are required to go ahead and complete Schedule 8812, which helps calculate the additional child tax credit. All right. So that is that. We got other dependent credits, ODC, y'all. All right. So other dependents credits, a non-refundable taxpayer credit for individuals not qualified for the CTC. Maximum benefits 500 per dependent. Eligibility here, you could see dependent of any age, 18 years and even older, not filing a joint venture, having a social security number, dependent parents, qualifying relatives. It helps reduce the tax bill, right? Like many of these other credits. All right. So this is obviously very powerful to be able to help your clients with. And then head of household, we got HOAs. All right, so let's get it. So household, head of household filing status. Y'all know filing status. You got single, married filing jointly, married filing separately, all those things. So a filing status that enables people to submit their tax documents at a reduced rate with a larger standard deduction than they would if they were single, criteria, divorced, or legally separated. Couples who hadn't cohabitated for the previous 6 months, spouse filing independently tax returns. So there's the advantages of that. So if they can't qualify, it gives you a little bit more benefit than just being single. Low tax rate, higher tax deduction for them. Again, for child support, alimony does not deter claiming head of household as long as there's over 50% of the household costs from the individual income and savings required for qualifying and dwelling for more than half of the year. All right. So that is that. And then we got the American Opportunity Tax Credit, is basically for education purposes. It's a credit granted for approved educational costs that eligible students pay during the initial 4 years of the university. These are some of the criteria to make sure you're eligible and your clients are able to be qualified, eligible for this. So studying for a degree or other certification, no criminal drug convictions by the conclusion of the year, not having finished the first 4 years of college at the start of the tax year, beginning with the tax year enrolled at least a half time as a student for at least one academic term, not filed an application for the ALTC or the whole credit for more than 4 years. Maximum of this is 2,500 limit for each eligible student. It reimburses the eligible expenses for up to 2,500 within the first 4 years of college or another higher institution, pays for all qualified expenses up to 2,000 in the first 2,000 and 25% of all future qualified expenses. So as you can see here, you can go ahead and take a screenshot, take a picture of it. These are all the qualified expenses for this. You got tuition, fees, books, supplies, equipment, a reasonable room and board. All right. So that is the AOTC. Y'all got that? All right, cool. This is super important. Like, again, we talked about the importance of making sure that you guys are doing this right. A lot of times people mess up with this, whether it's intentional, unintentional. So I'm going to give you guys some pitfalls, things that mess people up when it comes to this. So common mistakes and pitfalls. You can make sure you're writing this. So mistakes, misspelled names. That's going to be one thing that people mess up on and get tripped up on. Trying to early filing, incorrect filing status, incorrect bank account numbers, unsigned forms, disreputable tax preparers, unfortunately, and consequences, right? We talked about different consequences, repayment of obligations, penalties, fines. Again, that ignorance tax is the consequence of that. Higher tax bills, unprocessed tax returns, tips to avoid the mistakes. So use a tax professional to assist with filing those. Y'all tax professionals in here, you guys now know what the right way to do these things are. Maintain a copy of the returns for at least 7 years. Use up-to-date tax tables and forms. Notify the SSA after wedding for married people, Social Security, and understand each filing status. All right, y'all good on this? Y'all good? All right, I'm just making sure. All right, so maximizing tax benefits. Again, we talked about all these different tax credits that you can take advantage of, again, for people that qualify for it. So you got the earned income tax credit to summarize, and you want to make sure that you're gathering the right documents on time. 1099s, W-2s, you want to file electronically. Child tax credit, you want to understand the eligibility of these things. So utilize advanced CTC payments, that's going to be key. Other dependent credits, so ODC, seeks professional advice on this, review the tax laws and changes. Head of household, so accurate reporting, optimized deductions, American Opportunity Tax Credit. Couples to use a combined $6,000 of scholarships and grants, pay $6,000, and the non-qualified. Education expenditures and report the $6,000 of the taxable income, and keep watch on how it affects after the EITC, okay? So in conclusion, just to wrap up again, I wanted to make sure that we wrapped up and ended on time. So kind of went through this quickly, but hopefully y'all are taking notes. Note takers are money makers. So conclusion here, tax credits are essential for reducing your tax liability. Credits may reduce the tax owed or increase tax refunds. Deductions reduces the income tax. We didn't get a chance to talk about deductions. Y'all know what deductions are. Basically reduces your taxable income, right? Especially if you're looking to help business owners and more high-level individuals where you're able to provide like more advisory type services like tax planning, outsource CFO services, like really understanding how to help business owners deduct for things is going to be key. So we talked a lot about credits, but deduction is going to be really powerful for you and your clients. Maximizing taxes enhances tax planning, maximizes benefits. So that's what we got here. All right.